Goodwill is something which is created because of your brand value, name and fame of your business. Okay, your business is doing good into the market, and it has a good name and good fame, a good brand value. That's why it has a goodwill. Goodwill means whatever is the asset, worth of the asset, like this is the building of the business, your business, first ground floor, first floor, second floor, all of it, whatever inside is worth of 2 million, let's assume £2 million, but if you want to sell it, you can sell it at 2.5 million. That 0.5 million is your GW, goodwill. Means you can sell it at extra value. Why can you sell it at extra value? Because your business has a goodwill. A goodwill means good value, brand value, more than the asset's value. It has a good name and fame. Now, people, goodwill is a non-current asset. It's an intangible asset. Means you cannot touch it, you cannot see it, you cannot feel it. Just like let's assume this is a car, you can touch it. The car you can touch, that's a tangible asset, but goodwill is an intangible asset. For partnership purpose, what you need to know is goodwill should not be on your accounts. What did I say? I said goodwill should not be on your accounts. It should be removed in a systematical way. It should be eliminated. In your syllabus, it calls eliminated, but generally you call it goodwill written off. Written off means closing it down, cross, yeah, or eliminated. So regarding goodwill, so many talkie is given here, but I already said all of it, most of it. You can read of your own time. Accounting for goodwill is what I'm interested more. They said so many things, but follow me very carefully on the screen. We do two things. Number one, we do goodwill created. First one, we do goodwill created. Two things I said. And the second one, we'll do goodwill eliminated. Goodwill eliminated or written off. Look at the spelling of written off. Written off. So now goodwill will be given to you. It will be tested in the exam. There are two questions going to come in from partnership, one in task 5, one in task 6. So goodwill is important. Now goodwill will be given any figure. Let's assume any figure. 60,000 is goodwill for my example purpose, is GW. And when is goodwill created? You need to know in terms of partnership, especially if a partner, new partner wants to come into the business. Existing partners, what do? They assess what is the asset and liability value of the business, or just the valuation of the business. Let's assume the valuation of the business is 500,000, the assets, net assets, but the existing partners, they can add goodwill on it because they're doing business already 2-3 years, 5 years, 10 years could be, and they have a good reputation into the business market. That's why for the existing partners, for the new partner, existing partner are saying that, okay, mister, you are welcome to come into our business, but our business is well established and doing good, although the net assets are worth of £500,000, but there is a goodwill you have to take into account, which is 60,000. Okay, that is the idea of goodwill. That means the entering partner, new partner, will pay extra money, will inject extra money. I will show you how the extra money works. Existing partners will be benefited from the new partner. I repeat, existing partners, because of the goodwill created and eliminated, these two rules and two calculation which you need to learn, which we're going to go through thoroughly. From these two, eliminate goodwill created and written off, existing partners are going to get benefited. Their capital will go up. And entering partner, although entering partner will bring some money into the business, but because of goodwill calculation, goodwill is just a calculation, yeah? It is not a money that you keep into the bank. Remember, what did I say? Goodwill is just a calculation. It is not a money you keep in the bank. It is not a money you get from the people. But because of the goodwill calculation, new partner is going to give some extra money from his capital. to the existing partners. I repeat, the new partner, entering partner, is going to give some of the money from his capital, the capital he's going to bring in, from his capital to the existing partners. Don't worry, it will be very easy. Well, we will calculate. Also, another way, another time, two times we do goodwill in two situations. When new partner comes in, also the second situation is when existing partner retires. Like one of our partner wants to go away, but before going away, we will calculate how much is the worth of the business. And if there is any goodwill, that needs to be taken into account. And because of the goodwill, the partner's capital can go up and down. How? We will see based on a ratio. And remember, people, also please write it down, whatever I have written. Number one is goodwill created. I said in the bracket, please write down old ratio. Old ratio or based on old ratio. Goodwill created, we calculate or calculate on based on old ratio, whatever you want to write, right? But just write based on old ratio or just old ratio. Another person came in, joining now. Who just joined now? Where's my phone? I need to take it. Yeah. Okay. You're 16 now. I don't know who joined, but you're welcome. But you have missed most of the lessons. But those lessons, the first 1.5 hours is been covered from my 2 videos. Yeah, these are not covered for my videos. Goodwill is not covered, but I will make some videos soon. Okay, I said goodwill created, remember, based on old ratio, and goodwill eliminated or written off based on new ratio. Please do write based on new profit sharing ratio or ratio. What do you mean by ratio? You know the profit sharing ratio, 20%, 80% profit, or 35, 45 percentage, 25% ratio. That's it. So goodwill created based on old ratio, written off or eliminated new ratio. There is a double entry for, let me take another color pen or highlighter. There's a double entry for goodwill created. What is this happening? Okay, let me take another color pen. Come on, come up. Okay, there we go. You know, goodwill created, when you do this bit first, we have a double entry to do. Goodwill created debit, capital credit. What did I say? Write it down even. GW or goodwill created. Goodwill created DR, debit, capital, CR, credit. Capital means partners capital account credit. Okay, that is the rule with goodwill created. And goodwill written off or eliminated, capital account debit, capital DR, and GW means goodwill eliminated. ILI, I'm writing ILI is credit. That is a double entry which you learn by heart. It will make sense, but I will go over. But please memorize it. Goodwill created, debit, capital account credit. That's the first one for goodwill created. And when we eliminate the goodwill, as I said, in partnership account, there should be no goodwill. It should be eliminated in a systematical way. That's the systematical way. So the double entry or journal for goodwill eliminated is capital account debit, and goodwill eliminated is credit. Ultimately, basically what we are doing is GW created from these 2 journal. If we summarize, goodwill created debit and GW eliminated credit. That is the summary of the goodwill account. Goodwill created debit, goodwill written off credit. That is the final, like 1 debit from here, 1 credit from here. These 2 makes your transactions there. Few journals are there, but let's go into the examples. Yeah, if it is little confused, like if you're confused, like goodwill created debit, capital credit, that is first thing, Ilias, Mr. Ilias, you said. Second thing you said, capital credit, goodwill eliminated, capital debit, goodwill eliminated credit. That's the second thing. And third thing also you created. Third thing I created basically from the top 2. Yeah, from the top 2. 1 goodwill debit, 1 goodwill credit I extracted, and that is the third one. Let's go in it. The journal to record the goodwill in the partnership accounts. To record means created, okay? To record means created. Goodwill is recording using the existing old profit sharing ratio. Remember, old ratio, I said, old ratio, that is create. This is all about created. Goodwill created, GW created, or they said recorded. You can write that as well in your writing pad. The first one is goodwill recorded or created. Look at this. Goodwill debit is goodwill created debit or goodwill debit. Capital credit. That's the first one. Yeah. Capital credit. Goodwill created or recorded debit, capital credit. That's the first one we do. And the second one I told you, this is the second journal. Goodwill credit. This is basically goodwill eliminated. You can write it down. Eliminated. They didn't write it, but you can write it down. Goodwill, even in the exam, it comes this way. Do a journal for goodwill eliminated. How do? You do this way. Goodwill eliminated credit, like GW eli credit, capital debit. That's the capital debit. Okay, people? That's what you must learn by heart. Let's do with some workings. I'm going to illustration, goodwill illustration. Look at the screen. This task is about accounting for partners. You have the following information about partnership business. Alan and Karen. Nick was admitted into the business 1st of September. Profit share effective until August. Until August, Alan and Karen, 35 and 65%. Would you agree this is old ratio, yeah? Old ratio, isn't it? That is old sharing ratio. But since Nick came in, that is going to be new profit sharing ratio. So this is the profit is share effective from 1st of September. This is new ratio. New ratio. Now tell me, old ratio, is it for goodwill created or written off? Or if I ask you goodwill created or recorded, based on what ratio? Based on old ratio, yeah? Goodwill created, GW created. Thank you, Archran. Created or also recorded. In BPP books, they said recorded. So learn both. And new ratio is goodwill eliminated or written off. GW eliminated. Okay. Now, look at this. They said goodwill is 90,000. Goodwill is 90,000. I'm going to show you the workings now. I'm going to erase. I don't need to erase. A and B. Goodwill is 90,000. 90,000 times by, you do 35%. 35%. And 90,000, you do 65%. Equals to. So 90,000 times by 35%, you get 31,150 for Alan, and Karen is minus 90,000 if I do, which is 58,000. Are you okay with the goodwill created, everybody? Look at this. 31,500 and 58,500. That is your goodwill created. So if you meant to do here, show the original entry record to record goodwill. Record means created. GW debit 90,000, but Alan and Karen credit by how much were you today? 31,500 and 58,500 for goodwill recorded. Goodwill created debit. You can still write recorded or created or just goodwill. The option will be given as goodwill, but for your understanding purpose, we call it created. Not creator. Goodwill, not creator. Archibald, it's not creator. It's goodwill created or recorded. Goodwill recorded debit and capital credit. Capital of A and capital of K credit. Now for the eliminated, what is the formula? Goodwill, not formula, the journal. GW Ili is credit, isn't it? and capital debit, isn't it? So 3 capital ratio got to do 25%, 45%, and 30% of 90,000. So I'm doing on my calculator. 90,000 times by 0.25, 22,500. 90,000 times by 45, 40,500. And 90,000 times by 3, 27,000. So look at the work I'm going to do. Goodwill created, we said, credit, GW, eliminated, sorry, GW eliminated, I beg my pardon. Eliminated is credit 90,000. Get your 1 easy mark. But other 3 capital is just A, K, and Nick. Capital, all of it is capital. Capital of A, K, and Nick is debit. Debit by those percentage figures, which is 22,500. 27,000 is the last one. And the middle one, I need to check it out. 40,500. Are you okay with the goodwill created and written off? Yeah. Can we write first cap as CR? Archon. Can we write first capital as yeah? Choice is yours. This computerized exam. You can choose capital first. You can choose debit first or credit first. Choice is yours. No problem with that. It just depends on the learning criteria. Yeah. Look at this goodwill. Please do write on your book. It is created, CREATED, or recorded for your understanding purpose. In the option, you will be given only goodwill. Goodwill debit, capital credit. That's our first journal. And the second journal is goodwill credit, capital debit with the 3 items. With the workings. Yep. We do have some time. Summarizing those last 15 minutes in 1 minute, last 20 minutes. I'm summarizing it. Good for goodwill. For goodwill, what you need to do is goodwill. You do goodwill created and goodwill written off or eliminated. Yeah, goodwill created means goodwill recorded. So goodwill created based on old ratio. Goodwill eliminated or written off is new profit sharing ratio. Yeah, just goodwill created is debit, but capitals are credit. Goodwill created debit. That's what you need to remember. Okay. Goodwill created debit, and goodwill written off is credit and capital debit. If you remember all these things, please do activity 5. Let me help you. 70% and 30% is obviously old ratio. There's no partner coming in or going out. It's just their partnership ratio changing. Old ratio, and 60%, 40% is the new ratio. In this business, nobody coming in and going out, but they just calculate the goodwill 110,000. So quickly do it. Created based on old ratio 70 and 30. Yes, Xavier, are you okay? And what is it? Eliminated. Eliminated is 60, 40. Yeah. Do these 2 and do the journal. Can you please do this journal? Oh, no. In this particular one, created is not asked, maybe, isn't it? Show the entries required to eliminate the goodwill. The second one being asked. Eliminate. Only do the elimination. And we know goodwill elimination is credit, isn't it? Please do the journal. Do A and B. I'm coming in 2 minutes time. I'm going to washroom for coming back. Yeah, do this A and B. It is very easy peasy. Okay, who has done? Nobody has done yet. Why not? What is the answer? Xavier has said something. Looks like Xavier is right. Where are other people? Yeah, Archran Goodwill is 110,000 credit. Alicia, yeah, well done. Okay. Okay, people are doing good, and I got the full answer from Xavier, which is because it's elimination. That's why my GW should be credited. 110,000 was the full amount, and capital of who are the people? MEN, who? Ben, A and B. A and B, capital. Thank you, everybody. Thanks. Oh, most of you are working. Hannah, Archer, and Alicia, well done. Capital. How much is the money? 66.44. I'll take your answer. Oh, look at this, the way of presentation. Horrendous sometimes. I did a mistake here. I should have written 110,000 in this box, the box I'm writing, and this is a tick box in it. Oh, look at this. Yeah, the credit, and this is tick box, and 66,000 and 44,000. Oops, my handwriting is getting horrendous as well. Thank you, Amin. Thank you, Hannah, Archer, and Alicia.